Looking at the banks just for a moment, we had a guest on earlier today that said banks are trading at about 7 times forward earnings. I'm looking at the S&P. It's trading at about 17 times forward earnings. Are the banks such a discount that you should just jump in with both feet, or is it more of a stock picker's market when we're talking financials?
Yeah, I mean, I think it is more of a stock picker's market. There definitely are more flows into some of the indexes, at least at the very front stages of that movement. There's probably money to be made there if you don't, know which exact stocks you want to target. But I would say the names that we feel most strongly about are still some of these flight to safety names, the super regionals, some of even the four largest banks, where we think we'll see deposit flows, where there's stability in deposits, capital's not a concern. And I think that's where you'll see a lot of investor interest until we get a little bit more stability in the system. We're still, watching deposit flows very closely, trying to figure out what these banks can earn moving forward. Excuse me. But like you said, they're only trading at 7 times today. So for a group that traditionally trades at 10 to 12 times at the larger end of the spectrum, there's a pretty significant discount here. So to the degree we get that stabilization and we can remove fears of failure, I do think we'll have a really nice run in the group and make up a lot of that gap that you showed from the underperformance here in the first quarter.
Yeah, certainly something to watch. Looking at the KBE right now, up fractionally in the pre-market. So you say you're looking for stability. How important will today's PCE report be for that stability? If we see inflation showing a clear downtrend, does that add the stability you're looking for? Does that give you an answer on what the Fed's going to do next?
Yeah, I don't know if it'll give us an answer per se. I think you said earlier, and we would agree with you. We expect another 25 basis point hike, but I think to the degree we can get stability around inflation, take additional rate hikes off the table, I do think that would help the group from a credit contagion perspective. That we haven't seen absolutely no signs of credit fallout as of yet, but obviously with what we've seen in the past few weeks, fears of a harder landing in the back half of the year have increased significantly. So, as we start to get this, stability back here in the weeks and months ahead, we presumably could come into another headwind of credit fallout later in the year. But if we can, take some of those rate hikes off the table, or presumably, as some are expecting, get some rate cuts, then yes, I think that would take another headwind off the table for investors as they look at the group.
All right, so you say investors are looking for safety and for quality right now. You're actually identifying a couple of banks that you think are relatively safe. One of them is actually a regional bank, Truist Financial. You have a couple others. Give us a sense of the names on this list that you believe in the regional bank space or even the big bank space that are quote unquote safe.
Yeah. I guess, that word safety maybe isn't as comfortable as some people thought a few weeks ago. But I mean, a bank like a Truist that has over 2 million account holders, has a very granular deposit base throughout strong markets in the Southeast, is one, paying north of a 6% dividend today. It's one we feel very good about over the long term. Same for our Regions, another very granular deposit base, small customer accounts, and some more rural markets throughout the Southeast that, again, lend stability. Even First Citizens that we saw in the news the last few days that, again, we look at these very granular deposit bases, more customer stability, strong capital, and just, that have been around for the long run. They're not in any real niche businesses. They're not idiosyncratic in any way. They're just kind of core community banks that have grown larger over time. And there's fears that, hey, community banking is dead and all the money's going to flow to the big four. We don't really believe that. There will be some dynamics there, but there's still a big place for banks, and these community banks hold an important spot in many of their markets, and we think that will continue.